Hi, hello everyone. Let's start discussion on a very important topic, guys, where we are going to look at the understanding NAFAD's role in Indian financial ecosystem. How the NAFAD will interact with the Indian financial system. So, in this video, we are going to discuss on what is a NAFID, the problems that NAFID will solve in the Indian financial systems, and then the Indian financial system ecosystem, how it's work and where the exact the NAFED bank will fits, and the different roles of the commercial bank. Then we are going to look in this video, NAFED plus commercial bank is a partners, not a competitor. So NAFED will be partners for the commercial bank to develop and grow the infrastructure sector. So how they will do this thing, and then we will look at the NAFED is a catalyst for India's bond market. So how the NAFED will play a key role in the bond market development in the infrastructure sector. Then we will look at how the cycle works for the NAFED, NAFED for the infrastructure loan. And then we will look at one of the example for the student loan different from the infrastructure loan. So guys, that's thing we are going to learn in this video. Before move to the next slide, I would like to request you guys, if you are new to my channel and if you are interested in the business analyst or the risks analyst, different roles like market risks, credit risks, operation risks, or liquidity risks, or if you are looking for the quant analyst, quant research kind of role, so please do and like subscribe my channel, so that will motivate me to create and more such videos for you guys for in these hot topics in the market. So let's start discussion on the what is a NAFID. So the full form of NAFID is a National Bank on Financing Infrastructure and Development. So it is set up by the central government of India. Okay. In 2021, they specially passed the new act where the act name is a National Bank for Financing Infrastructure and Development. It is I think 22 March 2021. This act will issue and pass by. Then this is RBI especially mentioned that it is an the development financial institution for the infrastructure sector. So it is an the development financial institution in the infrastructure sector. So in India, there are the five development financial institutions. One is a Exim Bank, second one is a NABARD, third one is a NHB National Housing Bank, fourth one is the SIDBI, and this is a fifth one, which is a NAFID. Okay. So the goal to solve the long-term infrastructure funding gap, we will look at the problems and all these things, but the key motive and the key goal or the key objective of government and the RBI to solve the huge gap in the infrastructure sector, and the commercial bank will face the asset liability mismatch gap, and they are not able to provide the loans for the such longer duration with short term investment. So the investment might be 3 to 5 years for the bank in the form of FDs or in the form of the saving accounts or the CASA balance or the recurring deposits. But this problem will solve by these NAFED financial institutions. And the key features can give a 50 to 20 plus years loan, unlike a regular bank can face huge challenges, gives these loan with amount of that loan is required is a huge in the cost. So that's why NAFED will come into the picture. So let's discuss on the very important topics, the problem that NAFED solve. It is on the most important, guys, and if you are understand this problem in detail, so you should be able why the need of NAFED banks in the Indian financial system. So first one, infra need a long money, and road, port, or the plant need a 20 to 30 years loan. So infrastructure sector need a long duration of saving money in that project. These are the huge gap, and that the commercial bank will not able to satisfy this bank gap because of asset liability mismatch problem or the repricing gap or the duration gap problem they will face in their domain. So let's then the second problem is bank have short money, bank deposit are only for 3 to 5 years. So the depositors in the form of the saving accounts, in the form of the current account or the or the FDs, RDs, that will be the longer duration is 3 to 5 years. So that's and from that deposit they will not able to loan provide the loan for the infra projects such as the 20 years or to 30 years. Okay, so result in asset mismatch bear from giving the infra loans. Then the bond market weak. In India, the bond market in the infrastructure sector is a weak. There is a no specialized body or there is a no specialized unit that will work for in the bond market and to collect or to raise the fund from the infrastructure sector and to provide that. So there is no such kind of the financial institution. So that's why there is a need of the NaFed to collect the funds from the bond market and invest in the infrastructure sector. And gap will fund in new infra project for 25 years. There is a huge gaps, and bank has fear. But bank has not that bank has fear to invest in the infrastructure project which will be the 25 years long. And for the growth the Indian economy, to boost the Indian economy, there is a huge need of the infrastructure of India. So in the current situation, India will paste or the post India will implement the 13% of GDP in the transportation sector, and that will be reduced by 8% if the infrastructure sector of India is strong. So it is on the 5% 5% huge amount that India will invest it in the transportation cost, and that will be minimized by if India have the strong infrastructure. So that's why there is a need of the bank or the financial institution that's work in this domain. So that's why there is a need or the problem that's solved by the NaFed. So let's understand in detail. NaFed in India is a financial ecosystem. So how the NaFed will involve? So what are the key players? What they do? Where from money comes and loan tenure and can take risks infra. So how much the capacity they have to take the risks in the infrastructure sector. So let's discuss on the commercial bank. There are the different types of commercial bank in India, like a private sector bank, public sector bank. For example, public sector bank as SBI or the PNB or the Bank of Baroda or the Canara Bank or the Union Bank, or in the private sector bank, HDFC, Axis Bank, ICICI Bank, Kotak Mahindra, IDFC Bank. These are the private sector bank, and some the rural or the commercial bank or some payment banks or some small finance bank in the India. They have the retail and working capital for the short term loan. They are not able to provide the loans for the infrastructure project which they need the investment for the 25 to 30 years old. And the money comes from the public deposit in the form of saving account, current account, deposit, recurring deposit. So these are the tenure of this investment is a less than 5 years, 10 year. And from that less deposited money they are not able to give for the infrastructure loan, which the loan tenure is itself in 20 to 25 or the 30 years. So there is a huge gap in the asset liability mismatch. So duration gap will happen. So that's why they are not able, and they can take a low infra risk. So that's why they are not able to give the loans for the infrastructure project. So then the NaFed is one of the player who do the infrastructure and long term loans for the infrastructure project, while the road construction, rail construction, port construction, airport construction, renewable energy, water management kind of projects. So their tenure is a longer in the duration, and money comes from there is a government, long term bonds, or the intermediary investment, the pension fund, the insurance fund, or the provident funds that EPFO will involve. That kind of money is invested in these huge the duration projects. So tenure is a 15 to 25 plus years, and can take infra risks is a very high. They have ability to take huge risks in the infrastructure sector. Let's discuss on the bond market player. So where in which the investor directly buy the bonds from the infrastructure sponsor or the NHI or the power grid organization. So, but the mutual funds and insurance and PF money can provide this thing to invest that thing. But there is no monitor on that as the NaFed will do. So then loan tenure is a 5 to 30 year and only safe rated project. So there is a rated project that will be the only safe, and there is no the intermediary which will be more focused on that bond progress and all these things. So that's the thing there. So let's move on the next slide where we are going to discuss on the NaFAD plus commercial bank is a practice or partners, or the partners, not a competitor to each other. So they are the partners. NaFAD will partner with. The motive of NaFAD is the financing infrastructure and the development, not a compete with the other banks. So keep in mind, guys. So that's why they partner with the commercial banks or private or the public sector banks and grow the infrastructure sector. So the motive of Indian government and the motive of the NaFAD to help to grow the Indian infrastructure sector. So let's discuss on the problem banks face with the infra for the commercial bank. Risks of 20 years loan, 3 years deposit. It is a, guys, you think, can you give someone for the 20 years rupees, and if you have the someone given money is 3 years and you are liable to pay that 3 years amount. So it is the risk for you for the 17 years for that risk for the commercial bank same. So they face a liquidity risk. Then RBI limit on lending to one sector group. So RBI has also provide or have the limitations to invest huge amount in the one sector. So there is a different sector and the different RBI limit will provide it. So bad memories from past the infra NPS. So there is a bad memories of the commercial bank that will NPS. So how NaFAD help banks to grow their the banking book. So NaFAD that takes construction risks. NaFAD fund risky early stage. So NaFAD will take the construction risks and NaFAD funds the risks at early stage when the the sponsor or the sponsor at that time just pay the interest rate, not pay the principal in the time of the duration of the construction duration of that infrastructure project. So at that time NaFAD will take a risk and take out financing, buy the loan from bank after project is ready. So NaFAD will buy the loan from the different banks and take a risk on its and when the project is get ready. So co-lending. Bank give a 5 years part, NaFAD give year 20 years part. So bank will give just a 5 years part, but NaFAD will able and NaFAD the sources of fund for the NaFAD is different. So that's why they are able to give the 20 years loan and guarantee NaFAD can guarantee the banks to making it safer, easier, and the competitive less. So let's discuss and move on the next slide, which is and the most important slide, guys, where we are going to discuss on NaFAD is a catalyst for India's bond market. So how the NaFAD will help to grow the India's bond market in the infrastructure sector. So let's discuss on why the bond market is weak for the infrastructure. So no long-term bond available for pension fund to buy. In the Indian infrastructure, there is a no specialized body to provide the long-term infrastructure bond and no long-term bonds available for the pension fund, insurance fund, or the intermediary international institution like World Bank, National Development Bank, Asian Development Bank. They will go and buy the infrastructure bonds in India. So there is no such kind of bond, and then the infra projects are too risky for bond investor. So if the bond investor, there is a no intermediary, I already told you there is a no intermediary entity. So the infrastructure bond to buy the investor is a high risky, and they will fear to take such kind of risks, and no triple rated infra bond in the market. So there is a no triple rated bond that will give the good return and that will give the good the minimum risks with the good return. So such kind of bond in the not in the market. So what NaFAD will does in this sector? So in issue its own long-term bonds for the 10, 15, and 20 years. Okay, bonds issue insurance and PF can buy this. So NaFAD will issue the bonds for the infrastructure project in the market with the 10, 15, and 20 year, and that bond can be by the insurance firms or the PF funds and collect the funds from there. Credit enhancement. So give the guarantee to project bond rating jump from triple B to double A. So it will give the enhance the guarantee. It will give the guarantee on behalf of that project's bond. So it will give rating will jump from the triple B to double A. So warehousing fund project and wait till it saves and sell it to the bond market. So it's make safe and fund project and send into the market. So that's the flow will happen. Funds the project, wait till it's safe, and that means NaFAD will initially fund the project. And once it's identified, it is a safe and it is not risky, then sell it to the bond market, that project, and generate and then grow, that will continue their cycle. So market making, buy sell infra bond to create the trading and liquidity in the market. So it is on the market making in infrastructure project, so where they can buy and sell the infra bond to create a trading liquidity. So let's discuss on how the cycle will work. What are the processes? What are the steps are involved in this cycle? So the first step is NaFed give the 25 years loan to the new highway project. Suppose there is a one of the project that will be a concession agreement, EPC agreement, or the operation and maintenance agreement. All these things done, and the NHI, National Highway Authority of India, give the approval to build that project, and the binding and the cost will fix. So it is under, in case suppose it is under 20,000 crore projects for the 200-kilometer highway. So it's all these things done, but they need a lender who provide the 20,000 crore. So in that case, NaFed give the loan to new highway projects. So such project NaFed will give the loan to, after reviewing that all these thing document, reading the concession agreement, identify the traffic risk or the model of that, the funds, boot model or TOT model or the hybrid annuity model. So different kinds of model is there. So accordingly, the bond NaFed will give the loans for that new highway projects. Then in next step, to complete the construction in 4 years, start its earning. So track all these things, and the that project construction is completed in 4 years, and tracks that project is start earning the revenue. So in that case, NaFed bundle the cash flow and issue bonds with its guarantee. So NaFed will do one thing. So bundle their all cash flows or all principal and interest, sum up the amount, and issue the new bond in the market. So the LIC EPFO mutual fund buy these safe and long term bonds. So this is are the same already. The cash flow is generated, the risks, the toll is collected, and the from the escrow account mechanism. So that the track by this, and then they will issue the bond, and then bond is buy by the LIC EPFO mutual fund, and the long term bond is by them, and then NaFed get a money. So NaFed will receive the money, the fresh money or the new money in their bucket, and they use it new project. So again, the NHI will issue the new project, and that money NaFed will utilize that in that the highway or the Solar Energy Corporation of India or the project. So that will again the similar cycle will work. So these are the cycle that continuously going to work and work. So it convert the risky project into the safe and the profitable projects. Let's move on the next slide, guys, where we are going to discuss the student loan is different from infra loan. So what is the difference between the student loan and the infra loan, and how we can understand what the difference between the infra loan? So the amount. So basically the key difference is the amount. So the student loan, the maximum amount will be the 10 lakhs, but in the infra loan, it is the 10,000 crore. It is a 10,000. It is a huge in the amount. Okay, the time period. Yeah, education loan will be, the principal and the interest rate which is paid by the student who take the loan in within a 7 year. But it is in the NaFID infra loan. It will take 25 years to time to repay the principal and the interest rates, and the risk is very high in this project. So risk, you get job in 4 years, and you will pay the principal and interest rate below the 3 years. So that's the risk is low in this case. So and if you are jobless, then the bank will give you the guarantee. It's the ticket size of this loan is very low, but the bank will sure while the give you the loan, so you will get the job and you will repay the amount. And the road completed within 4 years, and toll for the 20 years. So in the infrastructure project, when the road is that project is under construction, land is acquired, so it's the 4 years, the bank will not get the principal amount, he will only receive the interest rate. So these are the huge risks, and the toll for the after 25 years, bank will collect the principal and the interest rate, and the final buyer bank keeps it with SEP. So there is no the third party, bank need to involve the third party, and it is not required. It's the ticket size is low. But in the NaFed infra loan, so NaFed sale its bond to LIC or the pension funds or the APFO or the mutual fund to get the money and to invest in the new project. So that's the cycle will work. So let's discuss on the last slide, guys. The key takeaway from these videos. So complementary to bank, NaFID take long and early risks. Bank can't take this kind of risks because the NaFID is specialized bank in this domain. And the catalyst for bond, create a safe long-term infra bond for the investor. It is an act as a catalyst for the bond. Bridge the role, convert the unbackable project, bankable loans, and the investable bonds. So bankable loans and the investable bond. And the final goal, more infrastructure without tracing bank balance sheet. So final goal is a more infrastructure without tracing the bank balance. So that's the end of this video, guys. If you are like and if you are interested in this domain, so please do like and subscribe my channel, so I'll created videos on this topic, and that will definitely help you to get the better job in the industry. So thank you so much, guys, once again.